Welcome back to the Neuro Finance Masterclass. This is day 95 of our 365 Days to Financial Freedom series, and I'm Ibrahim. Today, we are completely leveling up our game.
Oh, absolutely. We've been looking closely at the raw numbers so far, but today's theme is liquidity heat maps, the gravity of price. We're going to learn exactly why the market gets pulled in certain directions. It's going to be a fun one.
All right, let's dive right into today's roadmap. We've got 5 quick sections to cover. First up, the invisible made visible. Then, the gravity of price. Third is reading the radar, followed by predator versus prey. And finally, becoming the architect. Let's get right to it. Section 1. The invisible made visible. Uncovering hidden market forces. You know, we've crunched a lot of data together lately, but today is all about exposing what's intentionally, deliberately hidden right under the surface of your standard charts.
So, just to give you a quick recap of how we got here. On day 93, we decoded the funding rate, right? Then, day 94, we cracked open interest. Those metrics gave us the context we needed. They told us the market was winding up for a big move. But today, day 95, mastering liquidity heat maps, this logically builds on that foundation. We are officially stepping away from staring at boring spreadsheets and firing up a high-definition visual radar. It's a total game changer.
Now, to really understand this radar, we first need to define a critical concept, the kill switch. In the high-stakes world of high-leverage trading, every single position has one. It's your liquidation price. When the market taps that exact level, boom, it violently and forcibly closes your trade. The real danger, that happens when thousands of everyday retail traders all put their kill switches at the exact same obvious support levels. It literally creates a ticking time bomb. We're talking millions, sometimes billions of dollars that can just get wiped out in a split second when that switch is flipped.
Which leads us perfectly into Section 2, the gravity of price, magnets and sharks. This right here is the absolute core philosophy of Neuro Finance. We really need to strip away the noise of the news cycle and understand exactly why the market moves the way it does.
And this brings us to a fundamental truth. Price does not move randomly. Price is irresistibly attracted to liquidity. High-leverage liquidation zones act like giant magnets. Think of it exactly like this. Liquidity is essentially blood in the water, and it attracts sharks. The price of an asset is forcefully pulled toward these massive pools of money that are just sitting there waiting to be triggered.
So how do these sharks, these massive institutional players we call whales, actually operate? Make no mistake, it's not an accident. It's a highly coordinated, ruthless hunt. Step 1, they hunt the clusters. They see exactly where all that retail money is desperately pooled together. Step 2, they aggressively shove the price right through those support levels to trigger massive forced sells. And Step 3, that resulting avalanche of selling creates the exact liquidity the whales need to secretly fill their own enormous orders, right before they snap the price back in the opposite direction.
Moving on to Section 3, reading the radar, mapping the liquidity. The really beautiful thing about modern trading is that you don't have to guess where these clusters are anymore. We've got actual platforms like Kingfisher, CoinGlass, and Highblock acting as our radar. They cut right through the fog so we can see these hidden clusters waiting in the dark.
Let's clearly define what this radar actually is. A liquidity heat map is a visual tool that uses bright colors to show you the exact location and the intense density of those clustered liquidation levels. Think of it kind of like military sonar or a hyper-advanced weather radar. But instead of tracking storms, you're tracking billions of dollars in real time. It is the ultimate tool to see exactly where the market's money is hiding at any given second.
Notice the stark contrast we have here. Hot zones, those glowing yellow and orange areas, are your massive liquidity pools. That's where billions in leverage positions are sitting totally exposed, highly vulnerable, ready to get wiped out. Cold zones, fading into purple and blue, mean there's barely any money there. It's simple math for the predators. If you see a blinding yellow cluster glowing just 2% below the current price, you better believe that is a prime, lucrative target for a sudden drop.
Exactly. And by reading these colors, a trader can easily spot the path of least resistance. If you know where those heavy yellow clusters are, you know exactly where the price is going to be drawn. Logically, if it takes way less effort and capital for the market to drop 2% and absorb $1 billion, rather than grinding up 1% for practically nothing, well, the price is going to drop. The path to the money is the path the market takes.
All right, Section 4, predator versus prey, choosing your role. Let's do a gritty reality check here. The market is a harsh, highly tactical ecosystem, and you have to decide right now what role you're going to play.
You really have to choose. Are you the amateur or the whale? The amateurs, the prey, blindly drop their stop losses directly into those obvious, bright, hot zones. They're practically gift-wrapping their money for the institutions, literally painting a target on their own backs. But the whales? They are the predators. They actively, coldly hunt those exact clusters down to snatch that liquidity and fuel their own massive wealth.
So, here are your literal survival tactics so you don't get crushed in the liquidation cascade. First, avoid placing your stops in obvious hot zones. Don't be easy prey. Second, wait for the whales to finish their hunt. Patience is what separates the prey from the architect. Third, watch the heat map closely until those bright glowing colors completely disappear. That tells you the zone is officially wiped of its liquidity. And finally, you only enter your trade when the price stabilizes. That very moment, right after the carnage, that is your absolute highest probability entry point for a massive reversal.
Which brings us to our final section, becoming the architect, mastering the cycle. This right here is the final evolution of a true neurofinance trader. You aren't just trying to anxiously survive the hunt anymore. You are taking complete control and mastering the cycle as an architect.
We want to equip you with a secret weapon, a direct, actionable cognitive task for you to do the minute this explainer ends. Step 1. Open up a free Liquidity Heatmap tool right now. Get it on your screen. Step 2. Look directly at the Bitcoin 7-day map. Step 3. Identify the 2 largest hot zones sitting immediately above and below the current price. You need to actively practice scanning this radar until it becomes second nature.
Because here is the powerful philosophical shift you absolutely need to make to succeed in this game. Stop thinking about where the price should go and start seeing where the money is. That shift in perspective is the absolute main takeaway of this entire masterclass. Let the market's gravity do the work for you.
Master the radar so you can clearly see in the dark. Avoid the hunt so you aren't the prey. Rule the cycle so you become the architect. These are your 3 ultimate, unshakable rules. If you can internalize this mindset, you step entirely out of the market's food chain and walk directly into the control room.
So we're going to leave you with this final provocative question. Looking at your heat map today, which zone is more attractive for a whale right now? Go check the Bitcoin heat map, run the analysis, and decide for yourself where the predator will strike next. See you next time.